Let me ask you a question. What if you could walk into any room, a boardroom, a negotiation table, a family discussion, a business deal, and know with certainty that no one there could outsmart you? Not because you talk the loudest, not because you have the most degrees, but because you think differently. Because you see what others don't see. Because your wisdom operates at a higher level. Today I want to talk to you about how to become so wise that you can't be outsmarted. Let me give you a truth that most people ignore. Incentives run the world. Not emotions, not speeches, not promises. Incentives. If you can read incentives, you can read outcomes. And if you can read outcomes before they happen, you cannot be outsmarted. In economics, behavior is rarely random. People respond to what they are rewarded for and avoid what they are punished for. That principle is visible in everything, from pricing strategies to political campaigns. Think about it. Why does a company lower prices? Because demand responds. Why does an employee increase productivity? Because compensation, promotion, or recognition is tied to output. Incentives create movement. When you understand what someone stands to gain or lose, you gain insight into what they are likely to do next. Here's a hook. If you don't identify the incentive, you will misinterpret the behavior. Many people judge actions at face value. They analyze words. They debate statements. But wise thinkers look beneath the surface and ask a sharper question. What is driving this decision? Is it profit? Is it security? Is it status? Is it fear? The real motive is often economic, even when it's disguised as emotional. Consider negotiations. The average person focuses on their own position. The wise person studies the other party's incentive structure. What pressure are they under? What deadline are they facing? What metric are they measured by? When you understand their constraints, you understand their flexibility. That knowledge gives you leverage without aggression. You are not manipulating, you are anticipating. Now think bigger. Markets rise and fall based on incentives. Investors allocate capital where returns are attractive. Consumers buy where value exceeds cost. Governments adjust policies to stimulate or slow activity. Incentives are embedded into systems. If tax breaks increase, investment often increases. If interest rates rise, borrowing slows. These are predictable reactions. The wise mind studies these cause and phi-effect relationships and makes decisions ahead of the curve. Here's another hook. Incentives reveal character under pressure. When someone is offered a short-term gain that conflicts with long-term stability, their response exposes their priorities. Are they driven by immediate profit or sustainable growth? And are they disciplined or impulsive? When you analyze incentives consistently, you stop being surprised by people's choices because you understand the trade-offs they are facing. To master incentive structures, you must train yourself to pause and analyze before reacting. Ask, what outcome benefits each party? What risk are they trying to avoid? What reward are they chasing? This practice sharpens strategic thinking. It transforms you from a participant into an observer of patterns. Over time, you begin to predict moves with remarkable accuracy. There is also a personal dimension. Examine your own incentives. Are you motivated by quick validation or long-term value creation? Are you structured to reward discipline in your daily life? Wisdom requires alignment between your incentives and your goals. If your habits reward comfort, but your vision demands growth, you will sabotage yourself. When you master incentives, you move beyond surface-level intelligence. You stop reacting to noise and start interpreting signals. You recognize that every action in business and in life is a response to perceived reward or risk. And once you see the reward behind the action, the strategy behind the decision becomes clear. Let me challenge your thinking with a powerful question. What is this decision really costing you? Not the price on the surface, not the money you see leaving your account. I'm talking about the invisible cost, the alternative you are sacrificing, the opportunity you are quietly walking away from. Because in economics, every yes carries a hidden no. Opportunity cost is one of the most underestimated forces in decision-making. It's not about what you spend, it's about what you forfeit. When you invest capital in one project, you eliminate the ability to deploy it elsewhere. When you spend time on low-value activity, you lose the chance to invest that time into skill development or strategic planning. And here's the hook. The greatest losses in life rarely show up on a receipt. They show up as missed potential. Wise economic thinkers train themselves to evaluate trade-offs constantly. They understand that resources are scarce: time, capital, attention, energy. Scarcity forces choice, and every choice carries consequences beyond the immediate outcome. The person who focuses only on visible gains becomes vulnerable to manipulation. The person who calculates opportunity cost operates with foresight. Consider business expansion. An entrepreneur may see a new market opportunity and rush to enter it, but the disciplined thinker asks, what is the return compared to optimizing my current market? What operational focus will be diluted? What strategic partnerships might be delayed? The excitement of expansion can blind leaders to the cost of distraction. Growth is not always progress. Sometimes it is misallocation. Here's another hook. Urgency is often the enemy of opportunity cost analysis. When people feel pressure, they make reactive decisions. They grab the deal. They sign the contract. They chase the trend. But wisdom slows down and asks, compared to what? Compared to investing in long-term assets, compared to building deeper expertise, compared to strengthening relationships. When you compare alternatives honestly, clarity replaces impulse. In personal finance, opportunity cost separates wealth builders from consumers. Spending on immediate gratification may feel harmless, but what is the compounded value of that capital over 10 years? The difference between investing and consuming is not just preference. It is future positioning. Wise individuals understand that today's small sacrifice may fund tomorrow's independence. Comparative advantage teaches us that success is not about being the best at everything. It is about being strategically positioned in what you do relatively better than others. Even if someone is superior in multiple areas, it still makes sense for them to specialize where their efficiency is highest and collaborate elsewhere. That is how trade creates wealth. That is how ecosystems thrive. That is how empires are built. Here's the hook. Ego competes. Wisdom specializes. Many professionals dilute their impact because they refuse to narrow their focus. They chase multiple markets, attempt to master every skill, and micromanage every function. But when you operate outside your core strength, you increase your exposure to error. You slow down execution. You open the door for someone more specialized to outperform you. Think about global trade. A country rich in natural resources focuses on exporting commodities. A country with advanced technology exports innovation. Each leverages its relative efficiency. The result is mutual gain. Now, apply that logic to your own life. What do you do with less effort and higher output compared to others? Where do your skills produce disproportionate value? That is your comparative advantage. Another hook. When you operate in your strength, you conserve energy. When you operate in your weakness, you consume energy. Comparative advantage teaches us that success is not about being the best at everything. It is about being strategically positioned in what you do relatively better than others. Even if someone is superior in multiple areas, it still makes sense for them to specialize where their efficiency is highest and collaborate elsewhere. That is how trade creates wealth. That is how ecosystems thrive. That is how empires are built. Here's the hook. Ego competes. Wisdom specializes. Many professionals dilute their impact because they refuse to narrow their focus. They chase multiple markets, attempt to master every skill, and micromanage every function. But when you operate outside your core strength, you increase your exposure to error. You slow down execution. You open the door for someone more specialized to outperform you. Think about global trade. A country rich in natural resources focuses on exporting commodities. A country with advanced technology exports innovation. Each leverages its relative efficiency. The result is mutual gain. Now, apply that logic to your own life. What do you do with less effort and higher output compared to others? Where do your skills produce disproportionate value? That is your comparative advantage. Another hook. When you operate in your strength, you conserve energy. When you operate in your weakness, you consume energy. Strategic wisdom is not about proving capability. It is about maximizing output. High-level leaders understand this deeply. They build teams not based on loyalty alone, but on complementary strengths. They outsource low-value tasks. They delegate operational work so they can focus on strategic direction. They know that trying to control everything reduces scalability. This principle also protects you from being outsmarted in competitive environments. If you compete in a crowded arena where you have no relative edge, you are vulnerable. But when you position yourself in a niche where your skill, experience, or network gives you an advantage, you reduce competition naturally. You are no longer fighting for attention. You are attracting demand. Consider entrepreneurs who attempt to replicate someone else's model without analyzing their own strengths. They often struggle because they are playing a game that does not fit their capabilities. Comparative advantage demands self-awareness. It requires honest evaluation. Where are you most efficient? Where is your thinking sharpest? Where does your value multiply fastest? And here's a strategic layer. Collaboration multiplies advantage. When two parties each operate in their area of strength, total productivity increases. This is why partnerships work when structured correctly. You handle what you are best at, they handle what they are best at. The result is greater than individual effort. To live this principle, you must release the need to appear competent in everything. You must build systems that support your strengths. You must align your time with your highest value activities. That alignment reduces friction and increases strategic clarity. When you understand comparative advantage, you stop competing blindly. You start positioning intelligently. And positioning, not effort alone, determines who dominates and who struggles. Let me ask you something powerful. Why do some skills pay more than others? Why does one idea create millions while another barely survives? The answer is not luck. It is not even effort. It is supply and demand. In economics, value is determined at the intersection of scarcity and desire. When demand exceeds supply, price rises. When supply exceeds demand, price falls. This principle governs markets, careers, industries, and influence. And here's the hook. If you ignore supply and demand, you will constantly feel underpaid, overlooked, and undervalued. Most people make the mistake of developing skills based on interest alone, without analyzing market demand. Passion without demand creates frustration. Effort without scarcity creates competition. But wisdom studies the market first. It asks, where is there a shortage of capability? Where are problems increasing faster than solutions? Where is attention concentrated, but expertise limited? Think about technology shifts. When digital marketing was new, the supply of experts was small while demand from businesses was exploding. Early adopters positioned themselves where demand was climbing and supply was limited. The result? Premium pricing and influence. The same dynamic applies in every industry. When you can identify rising demand before the market becomes saturated, you gain strategic advantage. Here's another hook. Markets do not reward effort. They reward relevance. You may work hard, but if your skill is widely available, your leverage is low. This is why differentiation matters. When everyone offers the same service, the price becomes the only variable that leads to commoditization. But when you combine skills in a unique way, you create scarcity. For example, technical knowledge combined with persuasive communication creates rare value. Analytical ability combined with leadership creates strategic influence. Scarcity increases negotiating power. Supply and demand also apply to ideas and perspectives. In crowded conversations, predictable opinions get ignored. Unique insight commands attention. When you train yourself to think independently, supported by data and principle, you become a scarce voice in a noisy market. And scarce voices are listened to. Let's take this deeper. Demand is not static. It evolves. Consumer preferences change. Technology disrupts. Regulations shift. The wise thinker continuously scans the environment. They observe demographic trends, economic signals, and behavioral shifts. They do not wait until the market is saturated to adapt. They anticipate change. If remote work increases, demand for digital collaboration tools rises. If economic uncertainty grows, demand for financial literacy increases. If attention spans shrink, demand for concise, high-impact communication expands. When you align your capabilities with these trends, you move from chasing opportunity to attracting it. Here's the strategic insight. Positioning yourself where demand is strong reduces competition stress. Instead of fighting for clients, clients search for you. Instead of lowering your value, you justify premium pricing. Instead of being reactive, you operate from leverage. But this requires discipline. It requires you to ask hard questions. Is this industry expanding or contracting? Is this skill becoming automated or increasingly essential? Is the barrier to entry high enough to protect long-term value? These questions sharpen your thinking. When you internalize supply and demand, you stop making emotional career moves. You stop entering overcrowded spaces without differentiation. You begin designing your growth based on economic realities rather than assumptions. And when your value aligns with demand while remaining scarce, you operate in a position of strength that is difficult to outmaneuver. Let me introduce you to a level of thinking that separates amateurs from strategists: asymmetry. In economics and investing, the most intelligent players are not chasing the highest possible return blindly. They are structuring decisions where the downside is limited and the upside is disproportionately large. And here's the hook. If you risk a lot to gain a little, you are not being bold, you are being careless. Asymmetrical risk-reward strategies are about protecting capital while positioning for exponential growth. This is how sophisticated investors operate. They do not ask, "How much can I make?" First, they ask, "How much can I lose?" Because survival is the first priority. If you stay in the game long enough, compounding works in your favor. If you get wiped out, potential becomes irrelevant. Think about venture capital. Investors fund multiple startups knowing some will fail, but they structure their portfolios so that one major success covers all losses and produces significant profits. That is asymmetry. Limited downside through diversification, unlimited upside through scale. They are not gambling emotionally. They are calculating probability. Here's another hook. Most people confuse high risk with high reward, but high risk often leads to high loss. True strategy seeks intelligent risk, not reckless exposure. In business decisions, asymmetry might mean testing a product on a small scale before full launch. It might mean entering a market with a pilot program rather than massive capital commitments. It might mean negotiating contracts that include performance-based incentives rather than fixed liabilities. The idea is simple. Cap your downside, expand your upside. This principle also applies to personal development. Investing time in learning a high-income skill has limited downside. You gain knowledge and competence, but potentially unlimited upside in earnings and opportunity. Building a strong network carries minimal financial risk, but significant long-term leverage. On the other hand, speculative decisions driven by hype often expose you to substantial loss with uncertain gain. Asymmetry requires discipline and emotional control. When markets surge or trends explode, the crowd rushes in. But wise thinkers evaluate exposure carefully. They calculate probabilities. They assess worst-case scenarios. They understand that one poorly structured decision can erase years of progress. Let's go deeper. Asymmetry is about optionality. When you structure your life and business with flexibility, you create multiple pathways to success, multiple income streams, reduce dependency risk, diverse skill sets, increase adaptability. Strategic savings create resilience during downturns. Optionality strengthens your position in uncertain environments. Here's a strategic insight. Being unoutsmartable is not about predicting everything correctly. It is about structuring your decisions so that even when you are wrong, you survive and learn. That mindset shifts you from fragile to anti-fragile. Mistakes become tuition, not destruction. Ask yourself, is this decision exposing me to catastrophic loss? Is the potential reward proportionate to the risk? Have I structured this in a way that protects my foundation? When you consistently apply these questions, you transform impulsive ambition into calculated growth. The powerful thinkers in economics understand this deeply. They build buffers, they design safeguards, they avoid all-or-nothing bets, they operate with patience. And because their downside is controlled, they can think long-term while others panic short-term. When you begin structuring your risks intelligently, you no longer depend on luck, you depend on design. And design creates durability in a world full of uncertainty. Let me give you a principle that economists, investors, and world-class leaders all understand. The highest returning asset you will ever own is not real estate, not stocks, not even a business. It is your human capital. And here's the hook: money can be taken, markets can crash, industries can shift, but what you know and who you can become compounds internally. Human capital is your knowledge, your skills, your experience, your network, your judgment. It is the engine behind every other asset you will ever control. In economics, capital produces income. Well-developed human capital produces opportunity, and opportunity produces leverage. Now think about information advantage. Throughout history, those who possessed better information controlled outcomes. Traders with early market knowledge made strategic investments. Negotiators with deeper research secured favorable terms. Leaders with accurate data made superior decisions. Information asymmetry has always been a decisive edge. The party that knows more or understands better wins. Here's another hook. Ignorance is expensive, and most people don't know they're paying for it. When you lack financial literacy, you overpay in interest. When you lack negotiation skill, you underprice your value. When you lack market awareness, you enter declining industries. These are not accidents. They are information gaps. And information gaps create vulnerability. Wise individuals treat learning as a strategic investment, not a hobby. They read beyond headlines. They study economic cycles. They analyze case studies. They observe patterns in consumer behavior. They upgrade their skills continuously. Why? Because the market rewards competence disproportionately. The more valuable your skill set, the greater your bargaining power. But here's where it becomes powerful. Human capital compounds. When you learn one skill, it often strengthens another. Communication enhances leadership. Financial literacy enhances business judgment. Critical thinking enhances decision-making across every domain. This compounding effect increases your strategic depth over time. Let's talk about networks. Your relationships are part of your human capital. Access to mentors, peers, and industry experts accelerates your learning curve. Collaboration exposes you to perspectives you cannot generate alone. In economics, networks reduce transaction costs and increase efficiency. In life, they expand opportunity. When you surround yourself with high-level thinkers, your standards rise naturally. Another hook: if you stop learning, you start declining. even if you don't notice it immediately. Markets evolve, technology disrupts, consumer preferences shift, skills that were valuable 10 years ago may be automated tomorrow. The wise thinker anticipates obsolescence and reinvents early. They do not cling to past success. They upgrade before they are forced to. Information advantage also requires discernment. Not all data is valuable. In a world flooded with content, the ability to filter noise becomes critical. Strategic learners focus on principles, not trends. They seek depth, not distraction. They prioritize knowledge that improves decision quality. Ask yourself, what am I learning that increases my earning power? What am I studying that sharpens my judgment? What relationships am I building that expand my perspective? These questions transform passive consumption into active development. When you invest intentionally in human capital and protect your information advantage, you build an internal asset that competitors cannot easily replicate. Your thinking becomes sharper. Your positioning becomes stronger. Your decisions become more precise. And precision, over time, separates those who struggle from those who lead. So how do you become so wise you can't be outsmarted? Control your emotions. Study principles. Understand leverage. Apply knowledge. Ask powerful questions. Practice silence. Stay humble. Guard your character. If you commit to this path, you will not just win debates, you will win destinies. You will not just close deals, you will create opportunities. You will not just respond to life, you will design it. And one day, when you walk into a room, people won't know why they feel it, but they will sense it. They will sense clarity, they will sense strength, they will sense wisdom. And when wisdom walks in, manipulation walks out. Thank you